This afternoon, the Ghana Trades Unions Congress calls on government to review its decision to freeze salary increment for 2014. And in business, some economists want the Monetary Policy Committee of the Bank of Ghana to impress on government to increase the country's productive base as well as increase exports to help address the depreciation of the cedi in the long term. These are live visuals that are coming in from the Bank of Ghana. We'll cross over to the bank very soon. And on international front, the International Criminal Court, ICC, says it can only investigate alleged human rights violations in South Sudan if the UN Security Council passes a resolution authorizing the Hague-based court to begin an inquiry. My name is Stephen Anti. All these plus more coming up on Joynews Today. Now, the Ghana Trades Unions Congress has called on the government to review its decision to freeze salary increment for 2014. The TUC also demanded an immediate upward salary adjustment to match the present economic situation.
It doesn't need anybody to tell you that with the cedi declining on a daily basis, the domestic prices of imports keep rising, and these have adverse implications for the living conditions of workers whose salaries are fixed throughout the year. And it's not just imported items that experience increases. Landlords adjust their rents to be able to cope. Lorry fares continue their upward trend. And in general, Ghanaians are facing difficult times. Over the years, we have talked about the fundamental problem with the economic policy we are pursuing over 30 years. And that analysis is based on our assessment of the economy, not now, but over 30 years now. That kind of policy framework has been going on. Neoliberal policies where we've liberalized the entire economy, opening our doors, everything coming in, our local industries dying. In the situation we find ourselves, with the increases all over, taxes here and there, increases here and there, VAT introduction, or further increase in VAT, there is no way we can talk about freezing salaries. There is no way we can talk about. We've already informed government of our opposition to a salary freeze in the midst of all these economic hardships and challenges.
Now, the rising youth unemployment is a problem the world over, and many governments across the world have been battling with ways to reduce this. Various governments have devised measures they hope will equip the youth and make them employable or start their own businesses to employ others. Well, a leading member of the National Democratic Congress, Horace Acquah, is advocating the Association of Ghana Industries, AGI, Ministry of Education and the government to collaborate and put apprenticeships at the heart of our education and skills system. According to him, this will drive the economy forward as it is the only sustainable way of addressing youth unemployment in the country to help grow the economy. Now, Horace Acquah is joining us in the studio for some discussion. It's great to have you, sir.
Thank you.
So
nice to be here.
You want a critical examination of the recruitment practices. Why so?
Well, all over the world, especially in Europe, what you would realize is that countries that have taken on these apprenticeship schemes are countries that are thriving in their economy and addressing youth unemployment. And I think that it is not a bad idea for Ghana to also do same. We are noticing that youth unemployment is rising. At the same time, government is doing its best to address that. The Ministry of Education also doing its best to also promote vocational education in the country. The recent youth enterprise 10 million kind of kitty for the youth who are planning to have or go into business, initiated by President Mohammed's government. It's a laudable thing. It's thriving in places like Uganda. But I think the one that will sustain the economy and see more of our youth go into meaningful employment will be the apprenticeship kind of schemes.
I mean, when you say meaningful employment, let me take you back to the existing structure of apprenticeship system. We do have hairdressers who go and learn how to be hairdressers through apprenticeship systems. We have carpenters, we have welders, we have mechanics. We already have, perhaps I should put it, a fledgling apprenticeship system. What do you want to change about this?
No, the system that we have at the moment, as we call apprenticeship system, is the master and boy kind of system that has been
in operation for years.
Yes, in operation for years.
And you think this is not good?
No. I'm not talking about the master and boy kind of system.
Okay.
I'm talking about a system where, let's say, school leavers, let's say in your last year of school, what it is that, that's why I mentioned the AGI that oversees industries. Let's say TCCL. And we have a chunk of the youth who really want to go into something to do with electricity or cable manufacturing and stuff like that. Now, what then happens is that whilst or almost when they are about to leave school, the identified industry will take them on, and then there'll be training. Whilst training, they are being paid. So training goes on up to a point. They still take classes in college or universities. So at certain points, what you realize is that these individuals have both the skills and a degree to go with, instead of us seeing people who are not actually wanting to go into straight university or can't get the opportunity to go into straight university.
But this suggestion is good, but practically, is this feasible considering the kind of educational systems we have? It does appear that many people who go into apprenticeship are those who couldn't pass through their formal education. For example, you are not able to pass your junior high school to go to senior high school, you consider apprenticeship. You are not able to finish your senior high school to go to university, you consider some form of apprenticeship. Practically, how feasible is this suggestion of yours?
It is feasible. I mean, what you just said is the old kind of apprenticeship that we have actually seen in years gone by. Now, what I am suggesting is the kind of apprenticeship schemes, I mean, practiced in countries like Germany, Austria, Switzerland, and they sort of like use that to bridge the skills gap. And at the same time, individuals getting the required skill in certain industries. You understand? Now, what we have here in the country and some African countries is the master and boy kind of system. Now,
which you've said already is not what you're talking about.
No. What I'm talking about is, let's say, a system that is being practiced in Germany, for example. Now, you could take a company like Siemens. Siemens, every year, has over 25,000 apprentices from schools, in their final year. Now, they go on there, train. Whilst training, they are schooling to actually end up with a university degree. Now, that addresses youth unemployment in countries like Germany. Now, if you take a country like the USA, is not practicing that kind of system at all. I think it's about 0.3% of the youth who are actually in apprenticeship in the USA. So you realize that the skill gap in a place like America is so huge. Unlike places like Germany, where they have at least 70% of the youth, whilst in their final year in school, high school, going into university, they actually identify a huge company, go in there, train them, and then at the same time having this university kind of education. What then happens is that this individual has both employment and at the same time learning a skill. What it does for the industry is that the industry will then be training their own personnel. This personnel will be used to the industry. It's not necessary for this particular firm going out there poaching people or just getting people off the street then to come in. But then it will simply address the unemployment situation.
But do you think that the environment, or I should say the atmosphere, is ripe for this kind of suggestion you're making?
Yeah, I think the atmosphere is right, because if you look at the Minister of Education and the minister that we have at the moment and what she is trying to do with the vocational sector of our educational system, the passion, the determination of the president to address youth unemployment, and the vibrance of AGI, I don't think that if they come together and actually try to address this as a collaborated kind of thing, I don't think that we can address it. And it's all about passion, and I can see that in these three sectors, and these are the three key sectors to actually come together and make sure that a system like this thrives.
You are a leading member of the NDC. Have you put this before your party and mooted or pushed that it's put into a system which is workable?
Well, not in an elaborate kind of form, because I can see that with the youth enterprise system that we have in our manifesto, we are almost...
Mr. Nia Yankra, I'm afraid we have to cross over to the Bank of Ghana, where the Monetary Policy Committee of the Central Bank has started its first meeting for the year. The Bank of Ghana this weekend announced measures to help halt the free fall in the city's value, warning of pecuniary sanctions, jail terms, suspensions, and revocation of the operating licenses of persons who flout the rules. The Bank of Ghana also directed that all transactions in the country should be conducted in Ghana cedis in compliance with the bank's notices. So we now go over there live to the Bank of Ghana, where the Monetary Policy Committee is meeting.
Bring forward the original date, but in doing that, we had to reduce the amount of information that you would normally give you at these meetings, because it's more focused on addressing specific issues of inflation and exchange rate movements. So, but before I go on, let me introduce two. There have been some changes in the management of the bank, and it's mainly to renew the staff in areas that we think that they are best suited for. We have two specific positions which are very visible to you, so I think I need to introduce them. We have a secretary, Mrs. Caroline Otu. If you can, she is the new secretary of the bank. She's actually the first female secretary of the bank. So, the former secretary, Mr. Boedo, is now head of legal department. We also have a new head of treasury department. That is Mr. Yao Abalo. And again, Mr. Ninaku is now head of governance department. There have been other changes but those are mainly internal. You don't see those personalities, so I'm not going to introduce those. But again, you are welcome to this press briefing. The Monetary Policy Committee held an emergency meeting to review recent global and domestic economic developments and assess risks to the outlook. I'm going to turn the whole thing upside down and announce the decision before we go on to explain. I think the Vice President did it once. Based on the evaluation, the committee is of the view that the risks to inflation and exchange rate stability are highly elevated, and therefore decided to increase the policy rate by 200 basis points to 18%. I present to you the highlights of the discussions. Global developments. The commencement of tapering in asset purchases in the U.S. alongside weakening economic conditions in some countries have spurred reversal of capital flows and volatility in currency and equity markets across emerging markets and developing countries. The fallouts have been most severe in countries such as Turkey, Argentina, Indonesia, India, Malaysia, and South Africa. For the month of January, for example, the Turkish lira depreciated by 7.2% against the dollar. The Argentina peso fell by 10.4%, and the South African rand lost 4.7% of its value, all against the US dollar. These have prompted large policy hikes of between 50 and 425 basis points to stem inflationary consequences of rapidly depreciating currencies in these countries. The responses by the central banks have restored some stability to those economies. The latest IMF World Economic Outlook indicated that global growth is expected to increase in 2014 to an average of 3.7%, up from 3% in 2013. However, the new developments in emerging markets have raised concerns about contagion risks, which could impact on commodity markets as well as prospects for global growth. The commodity markets have also been affected by the developments in the U.S. economy and other advanced countries. Gold prices are projected at $1,292 an ounce in 2014, lower than the $1,411 an ounce on average in 2013. Brent crude oil prices are also expected to average about $104 in 2014, down from the 2013 average of $108.4 per barrel. Gold prices, however, could pick up in 2014 after the decline in most of 2013. These developments have significant implications for the domestic economy. Domestic developments. The domestic economy continued to experience fiscal pressures, exchange rate depreciation, and cost push effects from higher petroleum and utility prices. Inflation expectations have heightened, and the headline inflation ended 2013 at 13.5%, above the target band of 9 plus or minus 2%. Fiscal consolidation was lower in 2013 was slower than anticipated. The overall budget deficit was provisionally estimated at 10.2% of GDP, against a target of 9%, following a deficit of 11.8% in 2012. Expenditures were broadly on target. However, revenues were significantly below target, resulting in the fiscal slippages. The fiscal imbalances and the external pressures resulted in a current account deficit of 12.3% of GDP. All these figures are provisional because we are still revising. That's a current account deficit of 12.3% of GDP, up from 12.1% in 2012. This was on account of a worsened terms of trade and a significant decline in net current transfer receipts. In particular, individual remittances declined by 4.3% year-on-year to $1.7 billion. It may also be useful to note that cocoa and gold export prices declined by $1.3 billion in the year. The overall balance of payments of $1.2 billion does remain the same in 2012. Gross international reserve as at the end of 2013 amounted to $5.6 billion. That's equivalent to 3.1 months of imports. This compares with $5.3 billion at the end of 2012. These developments in the fiscal and external sector, together with the global pressures, resulted in a depreciation of the cedi by 14.6% against the dollar in 2013, compared to 17.5% in 2012. However, we have observed a much faster pace of depreciation since the end of December 2013. As at the end of January 2014, the cedi had depreciated by 7.8% against the US dollar compared to 0.2% in the corresponding period of 2013. Summary and outlook. Developments in the advanced countries, especially US, have resulted in foreign exchange market pressures in emerging market economies. These, together with the domestic pressures noted above, have increased the risk to inflation and exchange rate. As a result, we have seen a decline in the yield on cedi assets relative to foreign exchange assets or foreign assets. The development has also heightened inflation expectations. Similar developments were observed in the first half of 2012, which warranted policy responses from the central bank that eventually restored stability to the markets. The uncertainties in the outlook and weakened domestic fundamentals underscore the need for continued tight fiscal and monetary policies and measures that would reduce the country's vulnerability to shocks, re-anchor inflation expectations, and sustain macroeconomic stability. These informed the decision to increase the policy rate by 200 basis points. Additional measures. To support the monetary policy decision, the Bank of Ghana has issued a new set of foreign exchange regulations and code of conduct to guide operations in the foreign exchange market. The code of conduct was issued earlier, I think early this year, but that one is mainly to the banks, the dealers, and so on. And the regulations were issued, I think, 2 days ago. The new measures consist of revisions to the rules of operation of foreign exchange and foreign currency accounts, restrictions on foreign currency denominated loans, repatriation of export proceeds, margin accounts for import bills, and revised operating procedures for Forex Bureau. This is to ensure transparency, streamline activity, and reduce leakages in the foreign exchange markets, address anti-money laundering issues, and promote the use of the cedi as the sole legal tender. All these must be reinforced by ensuring that all the budgetary targets are strictly adhered to for fiscal consolidation. The committee acknowledges the ongoing efforts by government to improve revenue mobilization whilst containing expenditures. However, we believe a lot more is required in rationalizing the high wage bill. Indeed, let me just say that among the sub-region, we have the highest ratio of wage bill to tax revenue or domestic revenue. The target for the WAMS, West African Monetary Zone, is 35%, a ceiling of 35%. Last year, I believe we were in excess of 60% of tax revenue. So there's a need to really work towards bringing that ratio down. That will allow for other more sustaining expenditures like capital expenditures, infrastructure expenditures, and so on. Then we also have some medium to long-term pressures that we are suggesting to government. We know that government is already undertaking some of these, but we just want to reiterate them, and these include the fact that government must seek to broaden the tax base further, diversify and broaden the export base, reduce imports, especially of consumption goods that have local substitutes, and intensify efforts to block foreign exchange leakages such as transfer pricing. We are aware of efforts by government in this direction. There's also the need to consider renegotiating existing stability agreements with exporters to ensure that all retention accounts are maintained with domestic banks as pertains in other countries such as Angola, Guinea, Nigeria, among others. The committee will continue to monitor developments in the economy and take appropriate measures as needed. Thank you. Yeah, just before that, let me say that I have the notices here. I'm sure there has been a lot of discussions in the media about what are the implications and so on. So I don't know whether we what I've said before, giving you the reasons and so on, we should end at that. But I hear the main issues have been raised around the foreign currency and foreign exchange accounts. I just want to say that if you look at them, the main purpose of the regulations is to ensure that we continue to use the cedi as the legal tender. So when we say transfers between accounts, foreign exchange and foreign currency accounts, are not permitted, we are saying that because that's the way by which payments are made for services rendered. We are saying that we are stopping that. But it doesn't mean that you can't use for your foreign exchange account. You can use it if you want to pay or transfer, you change it into cedis and make your transfer. So the foreign exchange stays within the banking system, which is the system that allocates foreign exchange to all the sources. Those deficient sources, they take it from the surplus sources and allocate it to deficient sources. So that is why we are limiting the transfer among those accounts. But it doesn't mean that you cannot use your foreign exchange account. You can use it. You can also transfer monies outside it for payment of goods and services. What you need to do is support those transactions with the appropriate documentation. The bank has a list of documentation we've given them, and they will tell you what documentation you need regarding whatever transfer. If it is for payment of school fees, if it's for imports and so on, you know they will inform you what documentation you need. But there is no restriction on the use of the accounts. It is the transfer where maybe you buy a car or you go and pay rent or buy a house. We are saying that those products should not be priced in dollars, and therefore we will not support or will not allow you to transfer foreign exchange to those accounts. That is the main issue with that. And of course the issue of there being no checks on those accounts is also the same. That who do you issue the check to, or what is the purpose of that check? It's for payment of goods and services, and therefore we are saying that you are not allowed to issue checks on the account to effect such payments. Yes, and the other one is the foreign currency loans. If you don't earn foreign currency, you will get hit if there is a situation like what has happened. And you notice that a lot of the complaints are coming from those who have foreign currency denominated loans. We are stopping that. Unless you are a foreign exchange earner, the bank cannot give you a foreign currency loan. It has to be a cedi loan. So that is another major change that we are bringing in there. But because of legacy issues, we are saying that those that have been granted and drawn already will continue to run until the end. But those that are granted but not drawn must be converted into cedis. And all new loans must be in cedis. For the Forex Bureau, the issues are bordering on anti-money laundering, so on. I know you remember that, was it 2012? 2012, when we were blacklisted, but Ghana was blacklisted by FATF because of our laxity in the policies to combat anti-money laundering. So the purpose of this is mainly to address that issue. That is why we limit withdrawals to $10,000, and we also require more identification when purchasing these, or purchasing or selling to Forest Bureau. And we also request Forest Bureau to computerize so that it will be easier for our supervisors to go and verify whatever they are doing. Well, we are quite serious about this. We'll be giving monies to people that are in Mufti who know they will go to the Forest Bureau. If they are not, you go to any Forest Bureau to either buy or sell, and they don't give the receipt, we will deal with that. Again, you remember we did that. We revoked some licenses some time back in terms of Forest Bureau. Of course, the banks too, we will be watching the banks because there are issues, especially transfers without documentation and so on. We will be monitoring those very closely. I have here the head of both Banking Supervision Department and other financial institution department. They will have to do more supervision and ensure that these rules are strictly enforced. If not, they will also be in trouble. So we are very serious with this, and we will ensure that they are enforced. I think the last one is the repatriation of exports. What happens is that a lot of people export goods and services and then keep the monies in their accounts or keep them offshore. And in doing so, they deprive the banking system of the dollars. So even when there are no issues with our export receipts and so on, we have this compartmentalization where there is a compartment. Everyone is keeping his foreign exchange in a compartment and is not available for the general use. So we are enforcing an old rule. It is not a new rule. The 60 days repatriation has always been there. It is not a new rule. We are just restating that. And then we are saying that once you repatriate, within 5 working days, you should sell to the banks. And we are doing such that there is a mechanism such that whoever is selling to the banks will also receive a fair price for his proceeds. So this we'll be monitoring all this. If there's need for additional measures, we'll come up with them. So I think now we can open the.
Thank you very much. My name is Andrew Saglobi, a columnist in the Financial Times. I wish to congratulate the governor for such a bold action of the short-term measures put in. But my concern on that will be the implementation. Enforcement should be strong. Let me go to the questions I have. I said we know that the foreign currency market is one of the largest financial market in the world, and how much of that trade takes on daily in our country? How much of the foreign currency trade? What is the quantum that take on within the day in Ghana? And the 20 million injection into the market, would you say is too little, too late? So that is my first question. The second question is, apart from the short-term measures that you are putting in place currently, how are you intending to eradicate the perennial foreign exchange effect on the economy, that over the long term, how are you looking at that? And this is in line with what I'm asking. We have been pursuing inflation targeting for some time now, and then currently, the problem is on foreign exchange issues. So, won't you think that it's now time to rethink this sort of monetary policy that we are pursuing? So, these are my questions. Thank you very much.
My name is Pascal Kudiabo from the GhanaMonitor.com. From the GhanaMonitor.com. These measures, are they temporal or permanent? And I want to know if we say that these measures will lead to dollar hoarding and price instability, what do you have to say about this? Thank you.
My name is Toma Iberi from Business Finder. Well, obviously we have a severe imbalance between demand and supply for foreign exchange here. Is the Bank of Ghana going to review its debt calendar, maybe to increase the amount of debt available to foreign non-resident investors in order to attract more foreign exchange investment in medium-term treasury bonds? And I would like to know what has happened. How far have you gone with your plans to allow such non-resident investors into 1 year and 2 year treasury notes?
My name is Hello, and good afternoon. My first question is, Governor, I just want to know whether the pressure on the CD has to do with, the economy being overheated. Because when you look at our inflation rate, it's around 13.5%. Our growth rate is around 7.2%. Is that the reason? Secondly, now that the CD is depreciating, exporters are very happy because they are earning more. But importers are crying. What level of appreciation and depreciation do we need? To balance the two. Now that we've issued these measures, what happens to the black market? Because we are quite very much aware that most of the volumes of businesses go around that particular sector. Thank you.
Okay, thank you. BFT implementation enforcement, we will do that, just that. I said that at the end of my statement, that will be done vigorously. On the what is the proportion of Ghana's forex trading or compared to the whole world economy, it's very small. Let me give you an example. What we sell in a week, or what the transaction we undertake in a week, in a year is just about a week's transaction in Nigeria. So the economy, Ghana's economy is very small. But on the issue of the 20 million, I think the message was wrong. The 20 million, we supply over $60 million a week already. I think what was being said, which was misconstrued, is that is in addition to what we normally supply. Definitely 20 million is small and will not, but the bankers, as the bankers know, we supply. If you look at the oil supply for oil financing and so on, that is a lot. But the market is a little bit dry, or in terms of flows. The flows have reduced significantly, and I made some of the points here. Between just gold and cocoa, we've had a decline of $1.3 billion compared to 2012. In 2013, we had $1.3 billion less than we had in 2012. And you know the gold, part of it is surrendered to Bank of Ghana, and the other part, that is what they need for their own working capital, is surrendered to the banks or is put with the bank. So any reduction in those numbers will affect the supply we have on the market. Meanwhile, the demand continues to increase, and that is where the imbalance comes from. And when you add to it what is happening in the world, especially what's happening in the U.S. and so on, that affects both flows, investor flows into the economy, as well as the prices of our major commodities. Then you see the problem that it creates in terms of the gap between demand and supply, and that is what you are seeing there. And of course, when it happens like that, then the speculation sets in. Those who don't need foreign exchange see foreign exchange as a store of value, and therefore whatever monies they have, they go and change and change into dollars, and that brings additional demand onto the market, and then it's like a vicious circle. So what we are trying to do is, with these policies, especially the hike in the foreign exchange, in the rate, the policy rate, is to really make those CD assets more attractive. And therefore, instead of going to put your money in buy dollars and so on, you would rather buy treasury bills, Bank of Ghana bills, and so on, or put it with your banks in their term deposits and so on. And the return you get will be more than the depreciation of the CD that you can. So in effect, you make those assets more attractive. That is how we said. And then you were asking whether yeah, I don't think that is the framework, is the IT framework which is inducing this. We have situations in the past. We've had situations in the past. We didn't have IT framework. We were doing monetary targeting, but then in those situations too, we've had even worse depreciation in the CD down. We have now. So I don't think that is the case. What you need to look at is the IT targeting should be also, inflation targeting, not information technology. Inflation targeting really must be supported by other policies. I mean, fiscal is, for example, one. Where you have a stable fiscal or consolidation, or if there's fiscal consolidation, you have deficits of 6% or less, then it can work more. But if you have higher deficits, then it becomes more difficult. You have to continue to raise the policy rate in order to achieve your objectives. I'm told that we've had policy rates in the past of more than 20% before, so this really is not necessarily the highest rate we've achieved. And I think that is, then the Ghana monitoring.com, is that it? GhanaMonitor.com. Yes, you talked about whether the measures are temporal or permanent. Some of them are temporal. For example, the policy rate. The increase in the policy rate is temporary. It's temporary because you cannot maintain it at that. When the situation improves and we have stability, of course the risk can come down. But some of them are permanent. Some of the issues that deal with making the CD the legal tender and so on, these are permanent, and we will continue to enforce them. Whether it leads to hoarding, Maybe initially, yes, but eventually as the policies gain root, when we succeed in getting people to see the profits or the profitability of investing in our CD assets, we would see that hoarding will also go away. We'll see people bringing their dollars in. It has happened in 2012. We saw a lot of offloading of dollars, and that brought stability in 2012. Business Finder, is it Business Finder, talked about demand and supply imbalance, and whether we would have more debt, medium-term debt, for.
Whether you have more debt which is available to foreign investors who will give you foreign exchange.
Well, yeah, to extent, because we also have some rollovers coming up. For example, in February, this month, on the 17th, there's a rollover of about 400 million cedis, which is coming up at the end of that. Most of it is held by the foreign investors. We expect them to at least roll them over. As to whether you create new debt and so on, that really is the Minister of Finance who determines that. But I think there has already been issued a calendar. There's an issue calendar which states clearly what amounts would be done. The shorter duration, 1 year, 2 year instruments that you talked about, I know that the last time we said we are considering it. We are still considering it. But I think what we are waiting for is some technical report that will give us lessons from other countries such as Nigeria who have introduced it. What is the volatility? Was there any volatility, immediate volatility and so on? If that's the case, then the timing of it is important. I hear in Nigeria it has helped to actually reduce rates, interest rates and so on in the shorter term instruments. But we need to tread carefully and ensure that it doesn't bring volatility in terms of reversals. Okay, because if in a situation like this, it's those type of short-term investments that go out first. So you need to look at experiences and then make sure you avert any possible problems. Is the economy overheated? I'm not sure. I don't think so. It depends upon where growth is coming from. I think that if you have fiscal stability, deficit, or macroeconomic stability, and you can still have a growth rate of 7%, and that will not necessarily mean overheating. I think you brought up a very good point in the sense of that these problems of depreciation and so on, or the main sector which benefits is the export sector. But we also have to look at it well, because there has to be a balance, because some of the exporters also import inputs and so on. So yes, it's good to depreciate for the benefit of exporters, but if it goes too rapidly, it also affects their business plans and so on. I think in real terms, the depreciation is much slower than what it is in nominal terms, because inflation has picked up lately, and if you look at the differentials between our economy and our trading partners, that differential has widened, which then means that the real exchange rate depreciation will be much lower than it is. I can't remember exactly the figure, but we can give that to you. And then the black market. Yes, the black market is there. I think it's difficult to totally eradicate it, but where the markets are functioning properly, you tend to see that those become the fringe traders. We see lower volumes being traded there, and but strictly is the security agencies that we should enforce the adherence to the rules and regulations. In other words, they are not allowed to, if you don't have a license, you are not allowed to trade there. And I think it's the security agencies that should take care of that. I think that is all for now. Yes.
Good morning, my name is George from Joynews. My first question is, there are some who think that this is a good policy, but there are some issues with the approach. If it was gradual, it would easily sink into the market and the corrections would take place. And that is the view out there. What do you make of it? Again, some clarity on the black market. What is the approach? Because whether you like it or not, some people have said that you will see these hard currencies moving outside the banking system into the black market. How are you going to address it? Because if these currencies are within the official circles, then you can properly regulate it. What will be the approach for that one? And finally, about the quotation of goods and services in dollars. Again, what will be the approach? There are institutions out there that are still pricing in dollars. How are you going to deal with it? You think that leaving the security agencies would help address the situation? Even some government agencies are quoting in dollars, and it shows that they themselves are not confident in our Ghana cedi. How are you going to address that one as well? Thank you.
Thank you.
My name is Edward Nyako from Ghana Television. Mr. Governor, again on the black market, just behind the barracks of SEPs around the airport, and I believe they are supposed to generate revenue for the country. There's a huge black market underway there. It's been there for ages. And if we're asking the foreign exchange, those in the Forest Bureau to streamline the operations, what do we do to these people as well? Again, talking about government institutions charging in dollars. For instance, at the airports, airlines are supposed to pay their charges in dollars. Meanwhile, that is the IRS and VAT are demanding that from them. Meanwhile, if you look at your laws, say that it must be paid in cedis. So that's another angle I would like you to address. And then the last one, there's this suggestion out there that in 2009, someone said he promoted an idea that the Bank of Ghana should set up a forex account with the intent to attract Ghanaians out there. And just as you mentioned that remittances dropped considerably, he was saying that if we had done that 2009 and with an interest rate of let's say about 2%, that would have encouraged them to bring a lot of money, because at that time 0% was being the interest rate over in the US market in particular. What is your view about that? Thank you very much.
Thank you.
Mohammed Abu is my name. I represent the African Development Palace. I've been looking at the correlation between fall in cocoa and gold prices. The correlation between the fall of those commodities and revenue targets and the balance of trade deficit. Well, I've been thinking aloud for some time now. Would we have cocoa and gold targeting at this point, like introducing remote sensing and a remote sensing mechanism, so that we can always track these developments and maybe index the prices of those commodities to our revenue targets. Thank you.
Yes. Who is that? Okay.
Thank you, my governor. David Hampton, Radio France International. Concerning the liquidity in the city as against the dollar, I think the city has to be restructured for the economy to improve and for the burden to be reduced here. Now, in terms of the $10,000 per person or per exchange rate or amount, do you see a monitoring of all the forex bureaus and how much money, how much dollars they can use as a daily operation? Because you mentioned forex bureaus, and in a city like Acquah, where dollars are openly spent, is there a proper monitoring of the usage of dollars? Thank you.
Yes, it's probably back to Bloomberg News. Can you say a bit more on inflation and if you have adjusted your inflation target?
Thank you very much, sir. The issue has been raised about
your name.
Institutions. The name is Justice Lee Ademoye. I work with the Xinhua News Agency of China, the CNC Television. Now, I know particularly that the Ghana Police Service, when you are doing nominal vetting, like when they are checking your criminal records, now if you're a Ghanaian resident abroad, you pay, about 2 years ago it was $150. Now, even if you send the money down through any of these money transfer institutions, which will be given to your agent here in cities anyway, you are still expected or required by the police service to change that money back into dollars and pay to them. Now, two things I would like to know: what regulations the central bank has concerning state or statutory institutions which charge dollars for some of their services. And secondly, where do they pay those dollars? What account do they pay those dollars into? Does it help in, your dollar reserves? Now, secondly, no, I only asked one question about the Ghana Police. I didn't mention SEPS or immigration, which also do it anyway. Now, when exporters are supposed to change their dollars into cedis over a number of days, and then it is not yet time for them to, purchase goods again or import goods again. Now, when the time comes and then their currencies lose value, in the case of cedi depreciation that we are experiencing today, who pays for the difference in their transactions? Thank you very much.
Thank you. Yeah, let me take them. I may forget. Yeah, George. Whether it should be gradual or not. Well, some of the measures are gradual. We gave, for example, the Forest Bureau, we gave up to April ending for them to start. But there are some of them that you need to start immediately, because if you don't, you may allow, that activity to go on, and people may take advantage of that. And it doesn't really create any problem if you start immediately. I don't share in the view that you gain anything in those other areas by starting gradually. The black market, I think we would have to collaborate with the security agencies or the National Security, what's the name of the agency? No, National Security Coordinator. Yeah, to see how we can collaborate to ensure that, black market activities are the minimum. It will be a very difficult thing, though. So mostly, sometimes you have to rely on tips and so on, because sometimes people do it even in their rooms. I know that it will be a difficult issue. But I believe that if you have a transparent way of dealing with the issues as we are trying to do, you will gradually get a lot of those transactions into the official channels. What will remain out there will be small transactions that the government quotation of prices in cities, government is also included in the restriction. Government is also included. Indeed, I've had discussions with the minister on these foreign currency loans, because sometimes you hear a government agency contracting foreign currency loan with a bank and so on. He is giving, or has already given, the instruction to all MDAs to desist from that. That is barring them from doing that. So it is a concerted effort, not just the private sector, but government institutions as well. Then GTV also talked about the black market, and I think I have the same answer. And then IRS and VAT demanding payment in dollars. We will still have to, we'll have to dialogue with them. But some of the accounts, like if it's a direct, let's say gold mining company pays tax, the company earns direct foreign exchange. When it pays that amount in foreign exchange to the GRA deposits that directly into the account with Bank of Ghana. So it comes directly to Bank of Ghana. So I don't see a problem with that, where a company which is mainly a producer or earns foreign exchange pays to government, and government, because of its account with funds, pays directly to the bank. That, to me, is not a major issue there. Then cocoa and gold targeting. I'm not sure I fully understand it. It's a bit technical for me, because here we are looking at prices as well. Maybe if you are talking about hedging and so on, that can be done. And in a way, cocoa does something like that, because they sell forward. When cocoa board, when the price is good, they sell forward and so on. So there's some hedging there. But when prices generally go down, it takes everyone with it, whether you are selling for or you are hedging or not. Eventually to catch up with you. Only the first season, the season you have hedged ahead, that is the one that is protected. Gold, generally gold here is sold on the spot. On the spot. So I don't know how. Maybe that can be looked at, but because gold is mainly private companies that mine it and so on, they are treasurers and their management will decide on what they will do in terms of if it's possible to hedge the price, or what they will do to protect the price from falling too low. So then Radio France, usage of dollars. I didn't get what exactly. Did you get the point?
How are you monitoring the number of forex bureaus and the amount of dollars you're giving them to operate with? Some are hidden, some are very old and things like that. And then in a city like Acquah, they use dollars all over the place. What kind of monitoring do you want to put across so that it can be properly monitored? And I wanted to know if there is a form of extra documentation if you want to use beyond $10,000, and could it also be 10,000 euro?
No, this $10,000 or its equivalent. So it's less than 10,000 euro. And you can, if you want to transact business or transfer money outside for a purpose, maybe to pay for goods and services and so on, you do it through the banking system. We are not saying don't use or don't transact business worth more than 10,000. We are saying that cash. It's similar to the restriction on the third-party withdrawals of 5,000 and so on. Part of it is, as I said, is money laundering issues. Part of it is also to ensure that we use the banking system to do all our transfers, because that way the money stays within the banking system and is able to supply to everyone. We don't sell foreign currency to the Bureau. Currently we don't. We've done that in the past, but currently we don't. Some banks, I think, do sell, but not significant amounts. They report regularly to the relevant department, which is the other financial institutions department. I think what we need to do is to be more vigilant and visit them more to see how they operate and to show that they operate within the target. On inflation, yes, we have, this, because this is not the usual meeting. We seem to not have done a lot of work in that area, but because of that, our next meeting will be within a short interval. We are planning to do that at the end of March. That's about 1.5 months. And we will give you a full picture of how we look at inflation and so on. But the target for the year is 9.5%, and with a range of 11, that's between 7.5 and 11.5. Our initial forecast indicate that if it's business as usual, we don't do anything, we will end the year outside that target. About 12, we got around 12-point-something% now. But then if you calibrate it with the measures that we are putting in, we would be able to fall within. But it also depends upon the adjustments to utility prices and so on. So I would say that in the March meeting, we'll give more analysis on that with the fan chart and so on, so that you can see clearly where we will be within that. But as of now, there's an indication that if we don't put in place the policies that we are currently doing, then the chances are that we will be falling slightly out of the upper band of the justice. Yeah, this again, we will have to take it up, the issue of the police service, and not only that, the other institutions which are demanding payment in dollars. Because if the state itself cannot do it, then how do you expect the private sector to do it? So we will be taking that up. And which accounts are they paid into? Some of them pay into, they have accounts with Bank of Ghana. For example, National Communications Authority pays some dollar earnings into the account with Bank of Ghana. I'm not sure about the police service, but then some of them pay it into that. And then the exporter. What we are saying is that for the exporter, if you have an import bill which is maturing in about 30 days, if you get your export earnings, you can, based on the bill, you can put an amount equivalent to how much you have to pay in that margin account. Remember, we talked about margin account. In a margin account, such that when the bill matures, then it will be used to pay, so that you don't have to buy again. But where maybe your receipts come in, say January, and you are planning to import in March or April. We are saying that let the foreign exchange, the full foreign exchange, be available to the system. Your cedis you gain, don't keep it in some current account, which they will even charge you for keeping it in. Invest that. That is also a hedge. Okay, so you don't have to buy foreign exchange ahead or keep foreign exchange ahead. Invest it in instruments like this, like treasury bills, Bank of Ghana bills, of some of the instruments, the term deposits of the banks themselves. If you invest them, you get returns such that when it comes to the time you have to buy foreign exchange, you will not lose the value of that. In fact, if you look at the percentages, you will see that if someone had put his money last year in a 2-year note or 1-year note, he would have benefited more than someone who buys foreign exchange at the beginning of the year and keeps it throughout the year. So we want to draw attention to that. That's why we are trying to make the city investments more attractive, so that you can instead invest in cities rather than trying to keep the dollars to yourself. Yeah. You mentioned that. Yeah, what the account to attract, you talked about, yes, to attract, yes. Well, we'll look at that. The thing is that Bank of Ghana does not deal directly with the private sector. So on my immediate response will be that the banks should take that up and try and offer attractive. I think some of them do, and they get these deposits with them. Thank you. Okay, the last round is going to be long.
My name is Suleiman, and I write for Graphic. I just wanted a few clarifications based on what people are asking as we were here. Someone wants to know what happens to companies that want to contract foreign loans for their operations. If you can clarify that for us. And then secondly, this directive that you have given, is it also applicable to banks who guarantee loans for the purchase of fixed assets and other raw materials or consumables? Is it applicable to them? And in their view, they think that by paying, because the bank has guaranteed those loans, when the company is paying back, there is likely to be some exchange rate losses. Who is going to take care of that losses? Is the bank going to take care of the loss or the customer? Then my substantive question.
On behalf of others.
On behalf of the people who send text messages.
Okay.
My substantive question. The TUC of late has been on the back of policy makers, both monetary and physical, that you are.
Allow him. We understand it. Yeah.
BOG is implementing an inflation targeting regime, and they are saying they don't agree, and that policy is what is hurting employment. So it's both policy, monetary and physical. Oh, you have a problem with that. Give me this my time. So, Mr. Governor, is it an issue you considered during your MPC setting that you are going to look at the concerns that they've raised, that instead of focusing on IT, inflation targeting, we will have to reconsider maybe what they call employment targeting? Thank you. And last. With this directive that you've given, do I take it that there is no more quotations in dollars? just in simple language. All right, thank you.
Yeah, there's a lady. Okay, ladies, they are. You have to. Okay, you go ahead. Go ahead.
I should go ahead, right?
Yeah.
Okay, good afternoon, sir. My name is Obinman P7. I just want to know how much of your inaction contributed to the crisis that we face, if as you stated, the measures that you have introduced are not new.
Please, can you press the one with the mouth, the human being on?
Yeah, my name is Abigail Odumagoinchi from Joynews on Multi TV. I didn't quite get your answer on the hoarding issue quite clearly. We know that these new directives would actually discourage people from depositing in foreign currency, and there will be some kind of hoarding. Now, I'm thinking, won't that come back to help the economy, as we have seen that in recent times? People would decide to stash their foreign currency under their pillows instead of depositing it in the banks, and therefore there would be some, the system would be deprived of foreign currency. Won't that affect the economy in any way? Would we see the Bank of Ghana coming in again to inject more dollars into the system, as the system would be deprived of this foreign currency? And I would take this opportunity to also ask something on the microfinance industry. Recently, we have seen a lot of these companies folding up, and they are really doing away with the depositors' funds. People are crying over the funds that they've deposited in these microfinance companies, savings and loans, and so on. How are we going to protect depositors' funds? How is the central bank going to regulate this particular industry and make sure there's some kind of sanity in the industry? Because the upside of scam in the industry is just terrible. Thank you.
My name is Henry. I report for Really Good. I want, Mr. Governor, I wanted to vent your mind to the fact about effective management of the policies that you've introduced so as to bring the CD down. Because what I know, in a situation whereby we have pastors praying for CDs, we have government communicators, saying different things. We have opposition spin doctors saying different things. We know that the exchange is subject to volatility, because this issue about speculation and panic buying. Good. And secondly, is it not high time we address the economic structure in this country? I think because most watchers in the economy know very well that this thing is got to do with our economic structure. Is it not high time that we took the bull by the horn and addressed the situation, because we know this issue will be perennial? Thank you, Governor.
Thank you.
Hi, good afternoon. Drew Hinshaw from Wall Street Journal. I think for people kind of watching from like 30,000 feet, Ghana was this shining example of an African consumer economy, buying a lot of imports, and perhaps this crisis kind of shows the underbelly of that, which is that the further the CD goes down, the manufacturing exports just don't seem to keep up. I'm wondering if you see any larger lesson in Ghana's situation right now for peer African economy.
I thought you were limited to one question per person.
So who asked 6? Look, 2 quick ones. One.
Hey, 2.
Okay, quickly. Now, obviously, this problem with CETA is partly an issue of fundamentals in terms of a slowdown in inflows, partly a crisis of confidence. You've announced that you just increased your the money you put on the market from 60 million to 80 million. Now, how far is the Bank of Ghana ready to go to increase what your own funding of the market in order to restore confidence? We will now have this vicious downward spiral of lack of confidence in the city. Considering the fact that we have we have gross reserves of 3.1 months of import cover. Right now, the target is 3 months. That's one. The other one is simply that as of last year, Bank of Ghana was already working and succeeding to correct the inverse yield curve and actually bring down interest rates on short-term instruments. Now, obviously, with the increase in the policy rate and the need to make CD instruments more attractive, we're going to be looking at treasury rates going up again. What is going to be the impact on government finance? Because already for the 2014 budget, the budget for debt servicing is higher than the entire capital budget of government already before this crisis has come up. So what will be the impact on government? I mean, computed government, the impact on government?
Mr. Governor, the last time we met, I heard you were having discussion with the banks to begin quoting the Chinese yuan to reduce some little pressure on the dollar. How far have you gone with that? And the 5.6 billion reserve now, if you can give a details, how much is in gold, dollar terms, and other things? So we'll know the position of that. Thank you.
Jojafi here, Joy FM. My question on private institutions quoting prices in dollars wasn't addressed, so I want some clarity on that one.
Why did you ask?
I asked that how are you going to enforce it to ensure that they don't do it? And from your communication, I still want some practical steps that you're going to adopt to ensure that these rules and these directives are respected by all the institutions so that what you want to achieve is really realized. And again, how are you going to make sure that the dollars that move outside the banking system comes into the banking system? Thank you.
Yes. Yeah, my question is rather the reverse of what Thomas was asking. Your regular response today has been that the intention is to make CD instruments attractive. Now, is it an admission that the deliberate efforts that Thomas referred to make interest rates at the commercial banks come down, are they beginning to hurt the economy such that we have to put a halt to those policies? And secondly, people keep mentioning the fundamentals of the economy. Is the economy ready for the kind of low interest rates that we have been calling for? Would that not be at the expense of, the value of the cedi and, low inflation? Thank you.
Okay, so, yeah. Okay, thank you. Mr. Suleiman. Yeah, you talked about, you see, when there are so many questions, I forget what. So, you talked about foreign loans, whether
Whether companies can contract foreign loans?
No, if they don't earn foreign exchange, they are not allowed to contract foreign loans. Period. And then the guarantees the guarantee is the same as a loan, and so they are not allowed to do that.
So if, for instance, a company they want to export, they want to import, which is quoted in dollars.
Yeah.
They cannot do that. They cannot contract the loan
in dollars. No, because others. You see, the problem we have is we look at certain companies, maybe special companies. If you take the automobile industry, for example, you go there, they are quoting in dollars and so on, and they claim that because they import. So, but if you go to the shops, they also import goods. They import TVs and so on, but they don't quote in dollars. They should know. You should know how to price your thing to build in whatever you want. If you want to hedge, there are hedging instruments that the banks can give you in order to hedge, so that or even buy forward. You see, you don't deliver buy forward. The forager is not delivered, but you are guaranteed a price going forward. So there are instruments that I am not an expert in that, but from the layman's point, I know that there are a lot of instruments that the banks can provide to you to be able to protect you against depreciation or whatever what you see in the future. So I think corporates, individuals, and so on, we should try and take advantage of that. For inflation targeting, TUC, I've read. I haven't read the statement itself, but I read what Graphic said they said. So, because they were paraphrasing and so on, so I don't know what was missed out. There are some we would look at and see how we can help address. But the issue on inflation targeting, as I've said earlier, it is not, in our opinion, that is not the root of the problem. So it didn't come up for discussion during the meetings. This particular meeting, it didn't. When we have talked about it, we've reviewed the performance over the years, compared the performance with other years in which we didn't do inflation targeting and so on. And we are convinced that inflation targeting is not the problem. Employment targeting, that is not our mandate. Although in our law it says that we should also pursue policies that will lead to growth, and from growth you get employment. But the direct measurable target is the inflation, is inflation control. And if you don't have a stable economy where inflation is low and stable, you cannot have growth, because businesses cannot plan properly. This one leads to even depreciation and so on. So you want to first achieve macroeconomic stability, and then moving forward you will be able to. Peace, I don't understand what you mean by inaction. We can't come to you every time we take an action to come and tell you that this is the action we've taken. With the fact that, you see, central banks don't talk too much. You talk during crisis times, you come and try put out your policies. You've seen, I have enumerated to you that Ghana is not the only country facing this problem. We've had even worse ones, where in Argentina, for example, the peso fell just in 2 days, fell for 12%, by 12% in 2 days. They had an emergency meeting and took action to address it. Emergency meeting is to address issues that, I mean, you are not anticipating, and they then arise. It doesn't mean that you are not taking action. Every day, that is what we do. With my deputy here, management, we meet every day. Sometimes we even close very late, just looking at how we can improve things. So the fact that we don't come out to the public to tell you what we are doing doesn't mean that we are not taking action. So I want to assure you that we are doing our best here. We are splitting hairs to ensure that we bring back stability in the economy. Did you have another question? Or that is it?
The inaction question, I'm also interested in that. Because you made mention of the fact that the policies they are not new policies. Some of us travel and they give you foreign money. You want to change this money into dollars, they bring it to Ghana. They will ask you to provide invoice. It's happening to me. Nobody's ready to change the money. And the money cannot give it to us free of charge. You don't have any invoice to cover. You come to Ghana, the situation is quite different.
Yeah.
So that's why we ask inaction. It means that there's a thing we're not being right.
No, it means that you are not going by the rules. You are the ones who should be blamed for not observing the rules, the Forest Bureau, and so on. So it is not that there's inaction. I've told you that some of them are statements of what we already have, but there are some new issues, the new measures in there. And I'm saying that when these things happen, you try to reassess and see how you can or devise new ways of dealing with them. But we are also all responsible citizens. When there are regulations and rules, we should try and go by them. But we all wait to do the wrong thing and then let someone come and catch you. So it's like I don't want to make that example, but generally, what I'm saying is that we are doing our best. But if you have issues during times that we don't meet to discuss these issues, you are free to approach us. I don't know, maybe our people have not been very cordial or something. AC, when you ask AC, we have, in the governance department, we have economists there who can answer questions that you need answers to. So please, the only thing is that we may not be able to come on radio or TV every time to debate because we don't want to be seen in that light arguing cases or issues with others. So, but we will be willing to explain our policies to you. I think the last time we said that we will try and arrange meetings with the press outside this MPC where you can raise any issues that you want. I think that's still, you have to, we have to start that this year, yes. And I also want to say that we will be coming up because we want to also be able to support you to even improve, especially in financial reporting. So I think we would be liaising with you for those of you who have the desire to do further studies at the university or wherever to improve on your financial reporting. We will be willing to support some of this. So I think we will liaise with you in that regard. Radio Gold. No, Abigail first. She talked about the hoarding. Yes, I'm saying that maybe the immediate effect would be that hoarding. But because it is these policies are not alone, it's accompanied with the other policies such as the MPC, the monetary policy rate and so on. We believe that eventually what will happen is that people would invest in those instruments. In other words, they will change the dollars into cedis and invest them because keeping dollars under your pillow is very dangerous. You may be inviting armed robbers and so into your bedroom, which you don't want to do. So that the microfinance, I think we are doing a lot to improve that. One of the things we've done is to raise the capital requirements for them. I think now they are required 500,000 instead of the former 60,000. Was it 60? 100,000. So we and then there is more closer supervision because we now have a new department that deals with that. The head is Mr. Raymond Amanfo. Is there. So maybe when we finish, you can even talk to him on some of the measures. They've visited quite a lot of them. Those that are having problems, they've talked to them on how they can improve. Sometimes it's the way they manage the level of interest rate that they pay on the deposits and so on. It makes them unsustainable. So it's through dialogue, advising them and training them on how to go about this. We are gradually getting somewhere. Now, about 100 of them have started reporting on a regular, 120 have started reporting on a regular basis, and we move it to the others. So we are moving on that. Yes, Radio Gold, I agree that we need to change the structure of the economy. That is why if you see towards the end, we mentioned some of those medium to long-term measures we need to do. Talking to government, the president recently mentioned 6 commodities which they are targeting. I can't remember all of them, but I remember rice, sugar, and some import, those import substitutes, those that consume a lot of our imports. Rice, for example, consumes about $500 million. Even if it's produced and it is not consumed here, it can be exported. I was worried that we should start try to promote consumption, especially convince our women that the rice, local rice, is good. But I'm told that the companies that are involved say they are not worried because there's market for that outside, and therefore they will be able to export. So those type of activities or projects are very important. Well, on the larger lesson, Wall Street, I think that, the lesson to us all is that we need to, what I've just said in terms of broadening or changing the structure of the economy, making sure that we promote other export-oriented activities, things that would mean that if 1 or 2 commodities we have issues or the prices fall because of external factors, at least if you have a broad-based set of activities, then the others will take over. So generally, I think the lesson is that we need to broaden the base of our economies. And it's not only Ghana. I see vulnerability in a lot of emerging markets, especially those in Africa. They rely a lot on a few primary products, and once there are price issues, then they start facing problems. So we need to deal with that. And of course, we also need to make sure of macroeconomic stability, consolidate the fiscal. We have to have a situation where we run fiscal deficits of around 4-5% consistently. If you have that, even when you are hit by any shocks, you will be able to absorb the shocks more. There will be fiscal space to be able to absorb those shocks. The business funding of markets, impact on government finance. It's true. Let me take yours and Justice, because he is talking about the inverse of yours. Yes, government, it means that there may be more interest payments on it, but we also need to address the emerging issue. As I said, the yield on as inflation is rising, the rates were coming down. The yield became less and less, and therefore it made it less attractive. And then when you compare that with the cedi depreciation, you see people start moving away from that. The last auction, I think you could see that coming up, the last auction that I think 2 weeks ago and so on. So we need to bring the interest back into this, and that is why we had to go for the policy. And whether the economy is ready for what? Is the economy ready for low rates? Huh? Yeah. Yeah. Well, we will defend more by macroeconomic measures than by injecting into the market, because even those markets that have huge reserves cannot defend, continue to defend consistently an attack on the currency. the only way you can do it successfully is to have the proper policies, macroeconomic policies, to support it. So you increase some liquidity in the market, but you are not going to rely solely on that to stabilize the market. Yes.
Looking at the current scenario, is the economy ready for the kind of measures you were taking to bring down interest rates and the commercial banks?
Yeah. Well, yeah, because you see, these things will continue to move up and down depending upon the economic conditions. Now, if you remember, was it 2011 or 2010, when the rates went as low as 9%? I remember Treasury bill rates were about 9%, 11%. 2011. The rates went as low as 9%. But then when you then start building up the deficit, then the borrowing requirements go up. And then, of course, people, if they want to lend to you, they want to lend at a higher rate because of the effects on the yield and so on. So, yes, now it doesn't appear that we can lower rates now. But as the consolidation gets on board, I believe that we'll get back to where we were about 2 or 3 years ago. And then, George, yeah, as I said, on the quotations, we would have to collaborate with the law enforcement people, because that is, we by ourselves, first, we can't go and we can't prosecute. It's only the Attorney General. We would have to collaborate with them. And currently, that is what is our strategy, to collaborate with them more closely to ensure that we reduce and eliminate the quoting in price, quoting of prices in dollars. You said something about dollar outside?
I was just trying to find out what's the plan to ensure that the dollars that move outside the banking system comes in, because I've been asking some people already saying that the little dollars I even have, I wouldn't take it to the banking system.
They will take it.
There was a business man or a company that does commodity import. When these problems were happening, and nowadays they were getting as much as $100,000, $50,000 in the black market.
If you have those, tell us. Yeah, because it's true. Because let's be. I am sitting here. I haven't heard anything. I don't think any of my colleagues. But if you tell us, then with the arrangement between us and the security agencies, we'll be able to deal with it. But if you don't tell us, because even bureaus now are not supposed to do sad deals. They should all pass through the banking system. They are not supposed to do sad deals, and then they go to the black market to do it, or the parallel market. Yeah. So I think that we need a lot of collaboration. Sometimes tips and information from you also have. I've had a few tips from some of you, and we followed up on them. I won't tell who is telling me what. Yeah, it's true, but I've gotten some tips, even with things going on in the banking system. We follow up and deal with it. So we if you have information that will also help us do the work, it will be very helpful. Yes, the yuan. Yeah, the quotation in yuan. Well, we are working on it. Bank of Ghana has already established our accounts. I think what is left is just to move funds from our other currencies into the yuan. And so if you are traveling to China, for example, you don't need to take dollars to go and change. You can do it directly from yuan. And we are encouraging other banks as well. Acquah Bank is already doing it, and we are encouraging others. Because we will tell them if they need the yuan, they can come and buy from us to give to others. And Elom, yeah, he talked about the yuan. And then details of the reserves, I can't give you. I think we do publish something in our quarterly reports on the details, like gold holdings and so on. I think maybe see the director of research, Mrs. Acquah. She can give you a copy of the statistical bulletin, which has some information on that. Thank you. Your this is not working. Okay. Okay.